Hey folks, there's been another bank failure. This one is a lot smaller of a bank than the previous banks that have failed this year, but it's still a bank failure. And the fact that it's a smaller bank in a more local area, to me is more of a concern. I know a lot of people focus on the larger banks, as they should, because these larger banks take on a lot of risk. But there's two things that concern me about this small bank failure. The first is, one, the fact that it's a small bank. It's a small local bank. They only have 4 branches. So they're not necessarily exposed to a lot of the same risks that First Republic, Silicon Valley, or Signature banks were. Being such a small bank, they have a much smaller asset class, I guess you could say. But there's 3 articles that I want to cover. And the first one is from CNN, and I know a lot of people don't like CNN. I'm not fond of it myself, but as I've always said, it's important to look at all of the media sources, whether they're left-leaning, whether they're right-leaning, whether they're kind of in the middle or neutral, as all media sources should be. All media sources should be neutral, impartial. That's not the way it is, though. But because everything is biased one way or the other, you have to really look at all of the different media sources, because each one will tell you different things. And only by looking at all of them can you get a complete picture. All right, so from CNN, bank failure. Kansas Heartland Tri-State Bank closed by FDIC on Friday. The FDIC agreed to assume all the deposits of Heartland Tri-State Bank to protect customers, entering a purchase and assumption agreement with Dream First Bank of Syracuse, Kansas. Okay, that means the 4 branches of Heartland Tri-State Bank will reopen as branches of Dream First Bank on Monday. The recent closures of First Republic, Silicon Valley, and Signature banks this year have shaken up the banking industry. That's prompted lawmakers and the FDIC itself to introduce new legislation and new proposals aimed at strengthening the banking system. But there's some things in this article that I want to cover. One, Heartland Tri-State Bank is the first bank to fall since First Republic, the nation's second largest bank failure ever, in early May. The FDIC said bank customers can access their money by writing checks or using ATM or debit cards. They also won't have to change their banking, as they will automatically become customers of Dream First Bank. All right, Heartland Tri-State Bank had approximately $139 million in total assets and $130 million in total deposits, the FDIC said. Dream First Bank also agreed to buy essentially all of Heartland Tri-State's failed assets. Loan customers should be largely unaffected, according to the FDIC, because the FDIC and Dream First Bank are entering into an agreement to share the losses and potential recoveries on the loans. You should continue to make payments, including escrow payments, as usual. The terms of your loan will not change, okay? The next article is from Finance, Yahoo Finance. Banking turmoil arrives in small-town USA with Heartland Tri-State failure. All right, so according to this article, the 4-branch bank in Kansas failed, becoming the 4th lender to be seized by regulators this year and the 5th to fold altogether. Okay, that's something that's been overlooked by a lot of people. And I'm going to get to that here in a minute. Just some highlights of this article. The Heartland Tri-State Bank of Elkhart, Kansas is the smallest to go under in 2023 by far. It had $139 million in assets when it went down Friday, according to the FDIC. The other banks that failed thus far this year all had assets of more than $100 billion, including Silicon Valley and Signature. The biggest was First Republic, which had $229 billion when it was seized in May, becoming the 2nd largest bank failure in U.S. history. And that should be notable. that it was the second largest in history. That should very much be noted as it may pertain to other banks. See, back in the Depression, there were a lot of banks that went under. And the fact that First Republic has claimed, I guess you could say, the second largest failure title in history should be concerning, because that puts it on the scale of the Great Depression, the banking and stock market collapse that happened back then. Is that an indication of what's coming either this year or next? I've been talking about this for a while now, but obviously it hasn't happened. They managed to keep patching things and kicking the can further down the road. Eventually it will come due. It will all fall apart. I'm just constantly surprised by how far they can keep kicking this disaster further down the road. The failures of Silicon Valley Bank and Signature Bank in March were the third and fourth biggest ever. Silvergate, okay, now this is the one that the fifth to fold altogether. Silvergate, I don't recall seeing too much spoken of about it, but Silvergate agreed in March to shut itself down voluntarily. It wasn't closed by the FDIC, they closed down on their own. It's not yet entirely clear why Heartland went down, so they don't even know what the issue is with Heartland Bank right now. That is also very concerning. The Kansas Office of the State Banking Commissioner said in a release that Bank Commissioner David Herndon determined that Heartland Tri-State Bank was insolvent and that it became insolvent due to an isolated event. They're not stating what that event is. They're not, in fact, if anything, they're saying that they're not clear on what happened. Overall, the Kansas banking industry is unaffected by this event, and Kansas banks remain strong. That's a PR plug right there. That's just a PR move right there, simply to try to ensure calm among the public so that people don't panic. They don't want to create a run on the banks, and that is all that is for. It's just to give you the idea that the banking system is solvent and stable and strong. I guarantee you, we've had 4 failures in this year alone. I guarantee you this is not going to be the last, and I guarantee you that many, many more banks are either insolvent currently and managing to keep it covered up and keep going, or they're on the verge of becoming insolvent. There's an article I'll get to after this that would indicate that. Heartland is one of thousands of small community banks that serve local areas across the U.S. Most banks in the country are more like Heartland than they are like the industry giant J.P. Morgan Chase, which has thousands of branches and more than $3 trillion in assets. Heartland's headquarters city of Elkhart has a population of less than 2,000 people. So for a lot of people, they think that living in a very small town could kind of insulate you from a lot of the financial chaos that's going to come when this banking system in the United States collapses. This right here is a good indicator that even if you live in a very rural area, very small community, you're not going to be safe from this. This is going to affect you no matter where you live. Elkhart was among the many towns in that part of the country struck by Dust Bowl storms in the 1930s. Another community bank in that state, Dream First Bank of Syracuse, agreed to assume all of Heartland Tri-State's deposits and purchase essentially all of the failed bank's assets, according to the FDIC. Dream First had $480 million in assets as of March 31st, making it the 1,515th largest bank in the U.S. All right, so again, we've gone from the second largest, actually the second, third, and fourth largest bank failures in U.S. history just this year alone, beating out all but one of them in the Great Depression. Now, that's concerning because what happened back in 2008, 2009, we had the too big to fail, right? So they tried to consolidate all of these banks, and they passed this too big to fail crap where they had to bail out these banks to keep them from going under. But a lot of the shenanigans that went on during all that did was make those too big to fail banks even bigger. So it makes it more of a risk. If one of those goes down, it's going to have even bigger impacts on the economy. Now, the reason I said that this is not going to be the last, that more banks are either insolvent now and simply managing to keep pushing it along, or they're on the verge of going insolvent. This next article comes from the Washington Post, and it goes back to July 10th. I mean, it's from earlier this month. More banks will need to pad financial cushions under Fed proposal. The Fed's top banking regulators soon will propose tougher standards for big banks, including those the size of Silicon Valley. The Federal Reserve's top banking regulator wants to force some U.S. banks to increase their financial reserves, part of a broader push to shore up the industry after a series of bank failures in the spring shook confidence in the system. Under a proposal being prepared by Michael Barr, the Fed's vice chair for supervision, banks with at least $100 billion in assets would face capital requirements now applied to institutions with $700 billion in assets. The United States currently has 30 banks with assets ranging between $100 billion and $700 billion. So this does, one more paragraph. Our recent experience shows that even banks of this size can cause stress that spreads to other institutions and threatens financial stability, Barr said. All right, there's a lot more to this article, but essentially, they're concerned about these large, again, too big to fail banks. Because if one of them fails, the FDIC does not have the funds to insure everybody's deposit if one of these banks go under. And if one of these major too big to fail banks goes under, it's going to cause a chain reaction. It's going to ripple through the banking sector and impact everybody. So there's concern among the FDIC and the banking elites that the banking system is not strong enough. It's on the verge of failure, and they need to shore it up. But I also listened to part of a video from a meeting by banking leaders where they were talking about how people would be terrified by what the banks are, by the condition of the banking system. It essentially said, one of the comments made, and I wish I could find the video again, was that people have far greater confidence in the banks than the banking leaders do themselves. The banking leaders and banking managers. So the general public has more confidence in the banking system than the people that run the banking system. That should concern you. In fact, that should scare the hell out of you. Further down, these changes would increase capital requirements overall, but I want to emphasize that they would principally raise capital requirements for the largest, most complex banks. This wouldn't do anything for small banks like Heartland Tri-State, because they are so far below the threshold of what this proposal covers. But this proposal comes from early last month, and there were more articles regarding similar proposals all the way back to May. So they know this is an issue. They know there's a risk here, but they're not making a big deal about it, obviously, so that they don't cause a panic. The last thing they want to do is create a panic. I've told y'all before that the FDIC does not have the capability to insure everybody's deposit. What will happen is, even if one smaller bank goes down, you might only be able, if say you've got $5,000, $10,000 in your bank account, you might only be able to get $1,000 or $2,000 of that. Some people will be limited to $25 to $50, simply because they do not have the funds and resources to insure everybody's deposit. Yeah, I know FDIC says your deposits are insured up to, what is it, $250,000 now? They don't have that money, I'm telling you. They're going to give you the smallest amount of money possible to keep you calm, because if they expend all of their resources just to try to bail out one bank and insure one bank, and another one goes down, then they're not going to have anything left for that other bank. So that's the reason why, even if it's a small bank like Heartland, they can only insure so much. They're not going to insure the full $250,000 that they claim. You'll only get a small portion, and they'll determine how much of your money you get, not you. So you could be stuck with only being able to withdraw $25. That actually happened back during some of these previous bank failures earlier this year. People were told, look, you can only get $25. You can only get $50. You can only get $100. Don't count on being able to get your money out of the banks. You need to prepare for this. This is not the last bank to go down. They're not going to advertise this stuff because it creates a panic. And they're already concerned about a run on the banking system. They're doing everything they can to keep that from happening right now, because if there is a run on the banking system, there's nothing the FDIC can do. Your money is not going to be protected. It's not going to be insured. You will not have access to all of it. Do not hold all your money in the bank. Be prepared for this, because more will come. I've got another video that I want to do. I'll probably do it later this afternoon, maybe even tomorrow. But this is something I wanted to go ahead and get out. Like I said, this happened Friday. Some agencies are just, some news medias are just now reporting it. So I did want to get that out to you. Your money is not safe in the banks, folks. Keep cash on hand. Keep barterable goods on hand. Keep it in items that you can hold, whether it's gold, silver. If you're into that kind of thing, that's fine. If you want to hold cash, that's fine. Put it into assets that work for you, that you can liquidate easily, because you can't guarantee the fact that you'll be able to get to your money. Just because you've got $500 to $50,000 in the bank, whatever you may have, there's no guarantee you'll be able to get to it. You need your money and your wealth tied up in things that you can hold and that are easily liquidated in an emergency. Anyway, that's all I've got. I appreciate you guys watching. I apologize for the long gap in between videos here lately. I have been dealing with some stuff. I'll get some more videos out as soon as I can. Until next time, folks, take care, stay safe, keep prepping, don't get complacent. And until next time, I'll catch you later.